Hey guys, how are you all doing on this lovely day? I hope you all had an amazing Thanksgiving yesterday, hopefully with friends, family and some good food. I worry. Let's get started. Let's begin with China. Debt-stricken Fantasia became the first Chinese developer to face a wind-up petition filed by creditors, which would essentially for the debt-ridden company into insolvency. This also marks the first time a wind-up petition related to offshore debts has been filed against a mainland developer and its subsidiaries. Fantasia said in a stock exchange filing on Thursday evening that the petition was related to the $149 million loan of which Fantasia was the guarantor. In a public statement, Fantasia said, and I quote, "The company will seek legal advice to protect its legal rights and interests and take all necessary measures including maintaining a constructive dialogue with the petitioner to address the matter, and further announcement will be made by the company as and when appropriate." For those that aren't too familiar with a wind-up petition, what it does is seek to persuade the courts to force a debtor to liquidate all of its assets for the repayment of loans, and is usually a last resort after other avenues have been exhausted. Wang Fend, chairman of Shanghai-based financial services company Yilang Capital, said that this will fuel concerns about the developer's fate, but more importantly, it serves as a fresh sign that international investors are increasingly worried about mainland developers' asset quality and business prospects. Last month, they failed to repay over $205 million in bonds that were due in October 4, while also stating that there were no guarantees that it would be able to meet its other financial obligations. The company is also grappling with a sharp fall in sales. Keep in mind that while this is disastrous for Fantasia and foreign investors alike, they are only one of at least 6 Chinese developers currently struggling with vast debt that have already either defaulted or are asking investors to wait longer for repayment. Again, always remember that Beijing is the one pulling the strings here that caused these companies to fall. Though poor leadership and risky management were the causes of their fall, Beijing was the one tightening the screws on leverage to control financial risks, dealing serious heavy blows to the entire property sector. Since the property sector accounts for 1/5 of the entire gross domestic product of China, it is clear the government did not want it being run by a few big corporations, but rather shared by many smaller companies so as to have better risk management and more control over their economy. Moving on to the bigger story, what in the moon's sweet sacred name did I call would happen earlier this week? Did I not talk about the Fed, and that they would be forced to kick off faster tapering plans? Goldman Sachs strategists seem to agree with me, because on a daily noted released on Thursday, they warned that the Federal Reserve will likely double the pace of tapering its monthly bond purchases from January to $30 billion a month. The banks will then start hiking rates under Goldman's new scenario. The Fed will wrap up its asset purchase program with a realistic possibility that the Fed will then start raising borrowing costs in May. In simpler words for you smooth-brained operators out there, the increased openness to accelerating the taper pace reflects both the higher-than-expected inflation over the last 2 months as well as the greater comfort among Fed officials that a faster pace would not shock financial markets. As if news of this alone weren't enough, now we have big media making articles like this one, titled "Biden made one of the best decisions of his presidency this week, reappointing Jerome Powell as Fed chair." They go to great lengths doing serious damage control for this clown, going as far as heading portions of the article as "How Powell Saved the Day Through His Masterful Response to the Pandemic." They talk about why they are happy with high inflation and why we should be stressing about it. The disconnect from reality was astounding. I couldn't even finish reading this garbage editorial, but I found it important to note how the media is already starting to make it seem everything is good and dandy, and that inflation fears are not realistic, and that it's your fault as a citizen for not liking the system how it is. In even smoother words, expect things to continue to get rockier and rockier as time goes by, because the Fed sees no end in sight to the vast amount of problems they themselves caused protecting hedge funds and banks at Wall Street with their ridiculous policies last year. Also, you can also reasonably expect them to not take accountability over any of this, with the owned and corrupted media shifting the narrative to blame you for having higher expectations from your government and taxes. Lastly, I want to quickly address 2 huge topics. One is this new variant that has crippled markets in a single day. As you know, stocks dropped sharply today as a result of a new COVID variant found in South Africa, triggering a global shift away from risk assets. The Dow Jones dropped 905 points, the S&P lost 2.27% and the Nasdaq Composite slipped 2.23%. Already we are seeing companies suspend flights and enact restrictions of travel in Africa to try to contain the spread of this variant. The way this new variant is handled will be very important and impactful for the markets. I consider it new force to contend with, as its news alone of spreading can and will affect GME and AMC on a daily. As you saw today, it can and will cause entire global markets to easily slip on bad news of containment. If it's worse than the Delta variant, and it's spread globally, causing a toll in people affected and deaths, this will 100% affect day-to-day and long-term performance for all stocks. As such, if things do worsen, I think we could see AMC and GME drop, making it cheaper for us. We could see big institutions also selling portions of their holdings, as they could consider GME and AMC a riskier bet that they might not want to have on their portfolios just in case something happens. Furthermore, the current administration might even impose restrictions again, which could affect how many people are able to participate going to watch movies at an AMC. Again, this is not FUD, this is not fear, this is a cautionary heads up of things that might happen based on historical precedents as well as already suggested notions by the administration and other public officials as to how they would deal with this. These are things that are very possible to happen if this new variant is not handled correctly. This could be very good for retail investors because it means cheaper tendies for us. It could also mean a harder time financial for AMC and GME. The way this plays out will be very interesting to watch, and I will be here every day as usual updating you guys. Today's market dip will for sure not be the last in relation to this new variant, so don't freak out on these red days, and most importantly, don't start believe it's because a market crash is about to happen. That's just a bunch of people trying to clickbait you to get some clout. Stay cool, stay collected, the world is going through another bump in an already dire condition. Red days like this are a huge buying opportunity, so be sure to take advantage of them. The second thing I want to talk about is the whole thing with just holding and not buying. Listen, I get where the argument comes from, and in many respects it is actually sound. But the idea that to trigger the squeeze we have to stop buying is completely ridiculous and, to be honest, incredibly sketchy. Earlier this year, we saw brokers enact restriction on purchase for stocks and we didn't like it. It did not cause a squeeze either. Now we have people telling others to stop buying because if they get enough people to just hold, we will magically force the hand of hedge funds to have to start buying back. I'm sorry. Miss me this goofy tactic that wouldn't even come close to working. In fact, I think many of the people pushing for it are trying to get others to not buy to get the price to drop so that they themselves can buy cheaper. I will not stop buying shares for the stocks I like. I will not support or back anyone pushing this ridiculous notion, as it doesn't even make sense, and most importantly, I will call out people in the comments here on my channel pushing others to do this. Buying more stocks, even if they don't move, will make the squeeze higher and higher because it means shorters have to buy back more synthetic shares. It doesn't matter what they do with your money until then, because a halt in purchases will not cause a squeeze. The only thing this benefit is people looking to buy. Anyone partaking in not buying to cause a squeeze themselves will only do me and the rest of us a favor. So big props to you for being so gullible to listen to such poor advice and follow up on it. If you don't like it, the dislike button still exists, so feel free to press it. I will continue to do what is best for me and inform others on what I think is the best course of action based on what I know. Buying is super important, and it will only enrich you further and further the more we do it. Let's now talk about today. The Fed submitted over $1.451 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 53% of the total volume today, while dark pool trades for GameStop accounted for 38% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bearishly today. I will not do a technical analysis on it since I want to leave it for Sunday's video. As for next week, I will be making a video on Sunday going where I think it is most likely we will be headed to. GameStop traded bearishly too. As for next week, like I said, I will be making a video on Sunday going where I think it is most likely we will be headed to. And that is all I have for you guys today. Let me know what you thought of the video down in the comments below as well. Remember to watch the morning video if you missed it. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, having a blast this weekend and to the moon.